Good morning, Paul Georgie from Allendale. It's Monday morning, June 20th, and markets look like we're going to have a lot more of the same as we had on Friday near the close. The dollar is stronger here this morning. Crude is down 93 as we speak. Stock market and stock indexes all suggesting the Dow are going to open lower here today. And a lot of this is coming out of the Eurozone with the impasse of a Greek agreement. The tranche of money that is due the Greeks has been held back so far. So we've got that dilemma. There's a lot of talk from traders that, well, this is like the Lehman Brothers of 2008 comments that we're hearing, and we believe that this, if Greece fails, it could be much bigger than that, and traders are extremely nervous, and that's kind of keeping the commodity markets at bay as well. Early trading here, an overnight trade, we've seen quiet activity between the July contracts, the DEES contract, and the corn markets, one higher, one lower kind of activity there. We still have to deal with the open interest in the July contract. We've got a big week ahead of us here. We've got crop conditions reports out this afternoon. We've got option expiration on Friday. We've got last trading day, or first notice day, next week. We've got the USDA quarterly stocks report and the planted acreage report next week. So a lot of adjusting ahead of us here in the coming week. In nearby weather influences, weather probably can't be much better. We've got warm, we've got moisture in most areas throughout the Midwest, and it's been spotty, but the way our weather forecaster looks at it, that we'll have moisture throughout the Corn Belt most of the week, and just about everybody's going to get some rain. So that's certainly a good sign for potential growth. This afternoon's crop conditions report, we expect good to excellent to increase again, and for both corn and soybeans in the weekly numbers. The pricing of corn, however, in the nearby and the old crop contracts have gotten to the point now where they are inviting and starting to create some interest in Southeast Asia, where China, Japan, those Koreas, Taiwan are in looking for more corn and possibly could increase demand there. We also got a report on the cattle on feed report on Friday. That was bullish to cattle and a bit negative to corn and corn usage here for this coming year. So we may see some changes on that on the quarterly stocks report due to that. The Saudis were in buying wheat over the weekend, bought 360,000 tons of U.S. and European wheat. Jordan in tendering for 100,000 tons. So prices are getting to the point now where we're starting to see some demand pick up, and we could see more of that as we look ahead into the week. In the livestock trade, cattle on feed report, 104% on feed. Trade was looking for 105.5, placed it only at 89%. 92.5 is what the trade average was, and marketing number was much bigger than what they thought at 107% versus 103.2. So that the cattle on feed report is certainly constructive. However, the opening this morning should be higher because of the report. But how many times have we seen a cattle on feed report kind of buy the rumor, sell the fact type thing? So watch out for that here today in the cattle complex. Cutout values were higher in beef, up 78 cents in choice, up 119 in the select. The profitability and from packers' margins have dwindled to basically a break-even level. So they're going to need the product to improve here in order to keep slaughtering at the level that they have been. Pork cutouts up $2.96. Technical action on the charts look very positive in the pork. We're calling cattle and hogs both higher here on the opening at 9:05. If you got any questions, don't hesitate to give us a call here at Allendale at 800-262-7538. We wish you a very successful trading day. We'll talk to you tomorrow morning.